One of the big question marks in the markets at the moment is where things are going to move next. Clearly, there are a lot of headwinds at the moment. Fundamentally, we've got a situation where we're all looking at what's happening with inflation. Question marks over whether or not the central banks have done enough. We're certainly getting more central banks coming through with more interest rate rises. It's a question just how much more upside there is to go on inflation. Then, of course, they got one eye on GDP growth numbers. If we see big recessions, where we start to see some retracement of those interest rate decisions we've seen recently. Then comes what's happening on the risk asset markets, and there has been an appetite to take these markets up. There have been a lot of comments around the potential for this bear market rally that we've seen to continue. Then we had the pullback recently, and now big question marks over where we go next. So let's take a look now at some of the big charts from a technical analysis point of view with one of our regular guests here on IGTV. It's Patricia Elbaz, a technical analyst and lecturer in technical analysis as well here in London. So well qualified to talk about this. Good to have you back in. Thanks
Hi,
indeed.
Jeremy.
Thanks indeed for coming along.
Yeah.
Where it seems to be at this point in the markets where we don't really know where to go next. It's a bit of a breather going on. I guess we've just had the summer, so we've had relatively light volumes. We've just seen the US for a 3-day weekend. That tends to make a light volume period. But technically, what would you say about where we are as a general sort of market overview?
Yes, so we are at key levels, as you say. We're going to look at sterling, euro, and the yen. And in terms of sterling dollar, we're at levels now. 115 was quite significant. We're at levels now that we haven't seen since 1985. So it's quite huge going back so far away. And if we look at the long-term chart, straight away you can see the downward trending trend line. We're well below that at the moment. So there is still a risk that sterling could suffer further. The only thing I would say is sometimes it's good to look at something like I call it the FT indicator. When the Financial Times main news about currencies or equities goes on the front page of the main paper. Yeah. And when I see that, and it's not in companies and markets, I think, okay, maybe it's time to be a contrarian. So I would keep an eye on maybe being overly bearish on sterling and see if we have going to see a floor possibly around 110 and not be too bearish on that.
Yeah, it's interesting actually, going back to the chart, if we can bring that up again, because we've got this point at which where we got the recent support, bearing in mind this at the moment, I think these are 1 monthly candles, aren't they? So this is a very long-term picture. But it is interesting, if you get a break of this line of support we got here, you've then got to go all to the left-hand side of the chart here, which is 1985.
Yeah.
We've not seen levels potentially for sterling against this since 1985. I don't know what you were doing in 1985, but I can't remember. It's that long ago.
Yeah. Studying.
Yeah, that's right. Yeah. But yes. I mean, we're talking phenomenally long periods of time. And I guess there's not really much comparison to what was happening then as to what's happening now. But of course, we do have this political uncertainty, which to some degree has been cured. But we were talking about this before we went live to air. We haven't seen the uptick in sterling we thought we were going to see with that clarity, I suppose, politically now here. So there's a lot of question marks as to what's going to happen.
Totally. And we also don't know what the view is in terms of what's the new chancellor going to be doing. I read that he was pro-growth.
Yep.
Is that going to be something that the market is going to be saying, right, this is positive for sterling? So we still don't know. And overall, I would say I'm not overly bearish on sterling, and actually look out for those big psychological levels. 114 is one, and then obviously 110 is the major one. Yeah.
Let's look at this in terms of the close action that we've had, and pick up the next chart. And you say here, this is still sterling against the US dollar, but it is over the last couple of months or so on daily candles. This hammer pattern, explain more about this and how you go about trading hammers.
Yes. So this is a couple of days ago, we saw a hammer pattern. And what happens is the market goes down and then it closes towards the high. And as a result, you have the body open and close, which is very small, but it's at the top. Often a hammer could be a pause, it could be a reversal. In this case, I see it more as a pause and a potential move between 115, 116, some kind of, if you like, stability in the markets.
So not actually taking a position, just watching where this goes and expecting it to sort of bump along the bottom for a while?
Totally. And also just be aware of psychological levels. I think they really do play out. The big one was 120.
Of course, yeah.
And then when we broke that, big one would be 115. So now we're at that junction now. You know, are we going back towards 116, 117, or is it just a free fall to 110? I think it's going to be really much of a range, and see what kind of things we're going to see in terms of decisions.
Yeah, it's quite interesting technically when you look at levels of support. When you get a break of that, a convincing break of it, it's like a trapdoor opening, and you get all these trades flooding through in that sort of direction. On that note, let's bring up the next chart, because we have had a little bit of a break. This is euro dollar, a chart that you brought along, where you've got a break of that line of support. Again, this is going back to 1 monthly candle, so this is a very long-term picture. This goes all the way back to a projection prior to the euro, of course, back in the early 1990s. But you can see the lows on the left-hand side there, which is where the euro was established, and we saw this rally away. But at the moment, at least, we got this weakness for the euro, and we're tentatively playing with this one-to-one parity level.
Yes, totally. We're currently around 0.99. So we are hovering around the big psychological level. If we look at the chart and we see, oh, it's a range breakout, it's going to go down, then you see 0.85, which is a huge move on the downside. I'm still not convinced that we have got this huge move coming. What I'm waiting to see is the longer we're below 1, the more likely we're going to go down. So I'm really watching as 1 being my pivotal level in terms of the next move, in terms of, is there going to be a pause, or is it going to be another big move on the downside?
As they're saying, fundamentally, I guess many people are just waiting to see just what builds in terms of interest rate pictures and how damaging these rate rises are going to be for the economies. We already know that the Eurozone is in a bit of a dark corner because of a number of different things, not least of which is what's happening with the energy crisis, which is
Yes.
a really presumably a negative for the euro. So again, keeping things as they are. Let's look at a chart which takes us onto the daily candles, which
Yes.
gives us a better idea as to what's happening.
Yes, and here I just thought it'd be interesting to see the daily candles, because what we can see is a series of lower highs, and that's clearly bearish. When we see a series of lower highs, then we say, okay, the downtrend is there. And what you've got there is 1 being the key resistance there in terms of psychological levels. And here we've got a bit of support that we can see there around 0.99. So very much a series of lower highs, negative. Watch out for 1 to give us any kind of idea of a pullback.
But again, you're not keen on taking a position here? I mean, this seems to me to be a little bit of a break lower. Will give us a possible short trade or not?
Yes, I think this looks a little bit more bearish. Do you remember in the sterling dollar, we saw the hammer formation, which gave us a little bit of a pause, and if you like, something to say, maybe we're going to see a pullback. In this case, we always see a series of bearish candles. So there is more of a bearish story here, and you could actually say, okay, I'm going to put my stop and carry on with a short trade. But I'm just actually wary to wait and see if we're going to see some kind of support.
I think if you're looking for a short trade on the currency markets, you've got to look around the Japanese yen, haven't you? I mean, there's a whole reason to look at this. The Japanese yen has been hit against everything. The Aussie, Canadian, Euro, Sterling, the US dollar, which I think is your next chart, isn't it? We've got to talk about this because this has been an absolutely amazing trend to get in on.
Yes, and it's really much the yen in a free fall. I mean, going from, if we look at this chart, we're looking at beginning of 2022 around 112. We're at 144, which is really, really strong. And looking at this, if I put my range extension, I get 148. So we're talking about levels going back to 1998. My big question is it going to be allowed to go as far as that, or is there going to be some kind of intervention? So I'm always a little bit wary about too much of yen weakness, and here we've seen huge amounts of yen weakness.
How would intervention affect this? What would the Japanese be wanting to do? How would they intervene? So
seeing it that low, and also seeing that 140 was just broken. Normally we say, 140, maybe that's going to be a resistance. It's a psychological level. It's an important level. We haven't seen it for ages. It actually just went straight through it. And now we're looking more at 145. If they thought it was too much coming into the market and trying to just support it and to buy the yen. But we haven't seen that. We haven't seen any announcement about it. So I'm still worried that would they allow it to go as far as 148 or 150? So maybe some kind of resistance around those levels.
Okay, so if there was an announcement that they were going to come in, and indeed today I think we have had some tentative words from some of the central bank members to suggest that they are getting a little concerned about the weakness in the Japanese yen. If you were to see an announcement that they were going to enter the market, would you then sell this market, or is it again a wait and see?
I think I would be tempted to take a short-term trade just because of how fast it's gone. And as we know, it's never a one-way. And when it's very impulsive, sometimes you say, okay, it's so impulsive, there's got to be a little bit of correction. So I would be tempted to see if we can go back towards 140, as far as 140 or 142 initially. So I would look for a retreat toward this level, but I would just really be aware that it has gone too fast.
Yeah. Okay, let's round off with another chart that we've been looking at. And again, this is a one-day chart for WTI.
Yeah.
There's been a lot of concerns about the outlook for global growth, which has translated into this idea that commodities aren't going to have so much demand as they had previously had. And of course, this has manifested itself in this chart here. Technically, what can you tell us, and any positions to take on WTI?
Okay, so technically we can see that we had highs around 120, which were not sustained. And over the summer, what we've seen is the market actually going down and correcting. So right now we're at levels where we think there's going to be a pause. Really, my levels would be to trade at something like 90 to 85 initially, 82 possibly, but 90 being our major resistance. We've got a 20-day moving average, we've got the top of the range. So that's going to be the level which is key in terms of medium term.
So the 20-period moving average is going to be capping out any gains upside.
Correct, yes.
And you've got this line of support here, which, interesting enough, actually, support, you can see its resistance on the far left-hand side of the chart, the back end of last year. So it is actually quite an important level, isn't it, the way it forms this bottom.
Yes.
If you get a close below that,
then I would look for some kind of weakness. So if we get a close below that, then it tells you that, okay, we have got more of even a down move, because as far as that, we can't call it a correction anymore. So we could be looking at going into the 80s level, 75. So we could be looking at going back to the beginning of 2022.
Yeah. Okay, all right, that's wonderful. Thanks so much indeed for your time, Patricia.
Thanks,
it's always good to be able to catch up with you here in the studio. Patricia Elbaz is a technical analyst and also a lecturer in TA here in London. For more videos from us here at IGTV, join us on Twitter at IGCom, Instagram, and subscribe to our YouTube channel.